It's got a few things going for it technically as well. On the upside, I would right now, from this momentum, from this rally perspective, give a target of 540, and once that is taken out, a 575 as well. Keep your stop losses at the 495, 500 zone.
And I would also recommend that please your viewers should study it, should take a financial advice and try to buy on dip, because recently due to result it has moved up. So they should take a cautious call, and it's a long-term investment anyways. It's not going to be a...
On the fundamentals, you're saying 500 is a good...
Yeah, I think below 500, if you get 500. It is good. It
okay, it moved up 3% or thereabouts.
Yeah, yesterday it was up.
Okay, 9 a.m. The markets are starting, and
it's a wobbly start.
Let's a wobbly start. So let's get the first trades going. We should, of course, look at what IT stocks are doing per se. And whether there is some bit of a pullback out there continuing. I think this 2% rate will change. I don't think we'll have such a sharp downtick, but never know. Bring up IT stocks, and after the massive downtick yesterday, are we seeing further reactions? Maybe so. Maybe 1%, maybe 2%, maybe 3%. I think time will tell, but Nifty IT isn't starting off on a very good footing, so keep that in mind. We'll keep an eye out for some of those individual names, PI Industries, and whether that result reaction is strong. 10% downtick on open. Let's wait and watch if
Hindalco as well, by the way.
Hindalco down. Maybe keep an eye out for, on the positive side, keep an eye out for Honasa, keep an eye out for EIL, keep an eye out for Muthoot, because those numbers look interesting. I think a lot of these rates will change, so keep that in mind. But yep, some sharp reactions to numbers. We'll get in Varsha in moments from now to talk about both EIL and Lupin, which was the other one. Actually, I'm told Varsha is here with us, so let's get her in. Lupin Industries, because that one is starting off on a very weak. But clearly the numbers missed a trick, isn't it?
Yes, I would say of course, the numbers have missed estimates. If facing and market conditions, though they are expecting growth momentum to be back from Q4, but let's see then what happens. The major highlighting factor over here is their agro aligned with customer delivery schedules. Even the domestic revenue, if you see, was down. Onto the pharma, if you see, contracted by 6% year on year due to deferred supply schedules in Q4 FY26, though it grew 50% year on year in 9 months. So overall, yes, a very weak set of numbers posted by PI because of their agrochemical exports, which is down 32%. So overall, and also if you see the guidance cut by Kumi, which is one of the key customer of PI in the pyrosulfonate herbicide, is also a key factor why you're seeing such a weak set of numbers.
All right. Okay. Varsha, thanks so much for that. Really appreciate. We'll talk about Lupin a bit later, because we have to talk about IT and Moshe Khatri, who's the MD of Equity Research, IT Services and Payments at Wedbush Securities, and somebody who's looked at this space for such a long time is joining us today. Moshe, great having you. Thank you so much for taking the time out. And, sometimes price actions demand a conversation, and yesterday or over the last few days, what AI is doing to many sectors, but yesterday what it did to IT service companies in India made us think that it is about time that we get you yet again to talk about this. Now, we know, Moshe, that the rate of change of development in AI is moving at a very fast clip. Based on whatever is happening right now and possible to be forecasted in the next 1 or 2 quarters, do you believe that it hits the earnings capability of IT companies and parallelly the valuation multiples at which these companies trade at?
Yep. So let me just correct you for a second. I'm actually an MD in investment banking, focusing on tech-enabled services and fintech at Wedbush now. So
okay.
We have a market that's going through what we call a doomsday scenario for both software and IT services or tech-enabled services. And the market is telling you basically that revenues for the industry are going to go down to zero. And it almost feels like a deja vu of what we've seen 8 years ago when everybody was talking about the move to the cloud. This is actually, this Gen AI cycle is probably a 10-year cycle. We're in year point, just because we're going to start seeing some projects getting scale, reaching scale. Running this market, I don't know, 60, 70% of volumes are going through a machine. Ironically, if you think about this, who's going to put all these accelerators these days, and who's going to do all the integration, and who's going to get involved in all this infrastructure, if not the tech-enabled services companies? So that's one way of looking at this. And then ironically, all those SaaS companies that are getting hit are probably going to be all those companies ultimately that will be actually the facilitators that, of this Gen AI cycle. So we feel that this sell-off is probably a bit overdone. And the good news is that we are seeing, and I said that before, many companies in the space are adjusting their model accordingly. The new model in this Gen AI environment is going to be probably going to be more, it's less going to be driven by hourly kind of fees, and it's going to be more focused on objectives. You have to reach specific milestones to be able to get paid. And on top of that, you will see a decoupling from headcount growth to revenue growth. And you're seeing that for some of the companies that are changing those models and adjusting those models. So it doesn't happen in a day. This is a multi-year cycle. And we feel that what we're seeing right now, this doomsday scenario, is definitely overdone.
Okay.
It makes no sense whatsoever.
Yeah, and I think a lot of people will listen very carefully to what you're saying, Moshe. Thanks so much for that qualification. But I'm just wondering, you say it's a multi-year cycle, but what are the disruptions you could see in the relatively nearer term? And you pointed out the dislocation between headcount and revenue growth. I'm just wondering whether these models change more quickly, and what you think about, so you've been watching attrition, but do you look at employee count overall dropping, or do you think that these IT companies will reorient their workforces to perform different functions and whether programs?
So ironically, one of AI is going to pretty much pressure margins. To see that decoupling from revenue from headcount growth, you're actually going to see processes. And I think a lot of those probably benign processes see attrition rates probably rise, but probably the non-voluntary attrition piece. And on top of that, you will see that decoupling of revenue from headcount growth. And you have to see it this way, because the model will become outcome-based rather than hourly-based or maybe fixed-price work.
Got it. Moshe, typically people make money when they buy fear and sell greed. Is this the fear that people should buy, or could multiples go down further? People are talking about a PEG ratio of 2.5 to 3 times for a 4% growing company. That's about 12, 13, 15 times multiple. And a lot of companies are trading above that.
You know, the only thing we can look at is where multiples got to during the 08 timeframe. This is the last crash, and the multiples got to about 11, 12 times earnings. So we're not there yet, but we're getting there. That's probably the best proxy to look at in terms of where the downside could be here. But also don't forget, this earnings season we've had the tier 1 offshore vendors reporting actually better than expected numbers, guidance looked better, and you're yet to see some of the digital IT services report. EPAM, Globant, these are going to be coming next few weeks. So it'll be interesting to see what they have to say about guidance and about calendar 26. And then we'll take it from there. But again, the proxy or the downside is probably going to be 11, 12 times earnings.
That's a fair point. Moshe, thanks so much for taking the time. I think that clarity is important to have, particularly when, as we look at the screen and the pre-open rates have settled, there's a further 5% downtick for the IT index as a whole. Thanks so much at Angel One. On the technical side, Osho, I'm going to jump straight into it and ask you at this moment.
Very good morning, Alex. Yes, no doubt there has the market, but overall, looking at the technical aspect, I expect that looking at the momentum, try to accumulate at every dip that we are witnessing on a daily basis. But on technical levels, 31,000 is the zone where we can see some kind of decisive sustenance or stability. But it is way too early to say because of the fall, the momentum in the fall. So one should stay away from IT space and look for better opportunities from the financial pack or the pharma sectors as of now.
A fair argument, right? And Arshal, we'll come to you for your stocks, but Parag Thakkar, you might be constructive IT, yes, but currently, are there sectors which are giving you a more predictable, less disruptive investing opportunity and therefore shy away?
So I'm saying, see, that's why we spoke about FMCG, we spoke about financials, we keep talking, so I'm not discussing again. ICICI Bank is my top holding. We spoke about LG Equipment. By the way, it is the second largest manufacturer of compressors in India and 6th in the world. And promoter's name is Dr. Jairam Varadaraj. Sorry, I should
Nobody
tell him
said
sorry.
the name eventually.
But the point is, so basically there are other sectors. My point is, when in large caps you are seeing such a big fall just because of some narrative,
right.
my nature, it is my own problem that I cannot just stay away from it. I have to buy slowly, gradually on every dip. Sure. That is my thought process. So yesterday also I have increased my IT weight by 1%.
Okay.
On 5. Now today also, if it falls by more than 5%, I increase my weight by 1%. Okay. I am buying gradually, slowly. I have got 16% cash in the portfolio to buy in such dips.
Okay. So that's an important point. Do what you think is appropriate, though. Not everybody's risk appetite is the same. Osho, you've already told us your index call, specifically your view on IT, but what individual stocks are you looking at? 1 minute left.
Two counters are looking very positive. First one is ICICI Bank. On the daily time frame chart, we have seen a flat pattern breakout in this counter. So I'm expecting momentum could be sustained in the counter. The target seems to be around the zone of 1460 to 1470. The inverted head and shoulder pattern breakout, and I'm expecting in the coming period there might be strong momentum in this counter. So one can look to accumulate max sell around the zone of target is around 1120 for this counter.
Okay, well, stay on, gentlemen. We'll talk about what's happening in the markets on open in just a red candle on open, very likely. The question is, from here, the market breadth, that's looking really terrible, by the way. Mid caps are down 1%. 5%. This is brutal. This is very, very sharp reactions, and large, mid, small, everything is getting hammered. Let's quick. Small caps are 1%, which is fine. Let's get the heat map up on the screen and look at the red corner here. Infosys 7%, TCS 5%, HCL Tech 5%, Wipro, Tech Mahindra ONGC is a good call by Kush, 2% lower. Mahindra and Mahindra is about 1% lower as well. So, and Coal India, by the way, I think there's a brokerage note which is a sell on Coal India. That one is down about 1.5%. Tata Steel, Tata Motors PV, Adani Enterprises, Trent are amongst the others. A lot of red, very little green. SBI Life out there, Eternal, Tata Consumer, HDFC Life, but no, I mean, it's just few and far in between. The point is, if we can just pull up the nifty IT winners and losers here before I hand it over to Alex, because they'll just show you the extent of fall here. Look at that. So we know that the top 4 or 5 have fallen. Coforge is down, Oracle is down, Persistent is down, Emphasis is down. Everything is getting beaten. Another 1,500 points on the nifty IT. Alex, this is
that there are no winners at this stage for the IT pack, and they're all losing ground. You've seen the list, but there are a few stocks that are behaving as anticipated, and there are some that are not. One of them, of course, is Hindalco, and Neeraj pointed that out to you. The concerns on Novelis are weighing on the stock at this moment. This is 8.9%, and Parag Thakkar actually called this out for you. Company, so you would watch the amount of collateral. The tonnage has actually reduced. Value increase in gold, and the disbursements are increasing because the value of management, and see what they have to say. 9% down. Praj Industries is losing a little. As much as 13%. This seems like a little bit of profit taking kicking in. CRISIL is down about and Cohance Life Sciences. It's a list of IT companies in the broader markets that's losing ground. If I look at the 500, the Nifty 500, I think that there are just about 35 stocks that are gaining ground and most of them losing ground. One of the stocks that is gaining quite considerably is Engineers India, and Neeraj pointed this out to you. He said arguably the stock of the day, and it is in fact 14% higher at this moment. The other stock that he highlighted for you was Honasa. His gains up about 2.7% or so because the outlook looks positive. We spoke with Amit Kalyani, and he was pointing out that a lot of the allied businesses that the company has been investing in are now starting to fire, and heading into FY27, those will be both revenue as well as margin accretive heading into the new year. Linde India is building on gains as well. HAL is up about 1.4% or thereabouts. So the story though, Neeraj, has to be IT. Unfortunately, it's a lot of wealth destruction, but that is the story today.
That is the story today, and very likely, just because of the rate of change at which the AI models are getting developed now. With AI making an AI model, I mean, this is turning out to be quite stunning, really. Well, our guests are with us, and Kush Bora, I'd like to come to you first. You can take a pick. You can start with the market view. You can start with the view on whether the IT stocks are near some historical supports or not yet.
Yeah, so let's start with the hot topic for the day, which is IT, right? If you look at the lows that the index itself has made over the last year and a half, 2 years, it's been around the 31,000 mark. So while I don't say that you should go out and buy today, it is for sure coming. Speaking, if these companies aren't going to shut, they are eventually going to go up. It might take time, might not be, of course, a V-shaped recovery, but definitely the IT names are coming to a point where about names yet, because like I said, there could be some more downside coming into this space. Was suggesting, but close to a couple of support levels, which is 25,500, which so maybe we might just consolidate here for today, maybe a mild uptick during the day. But do you buy into this dip from a positional standpoint? Like I said, no, you don't be preemptive. You buy when you see that rebound and not just when the knife is falling.
Okay. On the fundamentals, and ultimately that's all you can judge a company by, right, in the outlook going forward. And you heard what Moshe Khatri had to say about the change in the way that these businesses will be done. Models will change. And so you dislocate from looking at headcount. By the way, very interesting point that was made by Deputy Governor Poonam Gupta, right? And what she said was that in studies that have been conducted, and I understand that it's early days for artificial intelligence, but what she said was in studies that have been conducted, it was proven that productivity increases with artificial intelligence, but it was also proven that employment also rises. There is a churn that takes place in employment rather than a complete loss of jobs that takes place. Specifically on the IT space though, if you move away from headcount, how do you judge them? Margins, according to Moshe, will head higher because productivity improves.
For sure, right? Because there will be lesser hiring because of the productivity gains. But I would love to think. Of course, I'm not an expert on this subject, but the system integrators, as Moshe was saying, those will be required. So we did a meeting with Wipro in one of the conferences, and they were said that we are not going to be out of the scene completely. We are going to whatever this coding and all those things which are developed by these companies, they will be used by the system integrators for their customers. These are not going to be directly used at the end of the customers. Some integrators like our Indian IT services companies who will be executing it. And I think you should invite a Investec IT analyst on the
But quick follow-up, how much do you think is to do with the narrative that is being created? Because even it was a year ago, right? It is more advanced. AI is no longer come back and it's solved. It doesn't work like that.
And sometimes accidents will
Not
also
all,
occur.
but in a lot of things it is. Of the AI models can very well go out and say that the model is hallucinating. If actually put in a task, go away, sleep, walk, come back after 4 hours and the task is done. It is happening as we speak.
I agree with you, but all I'm saying is it's not completely hands-off. And from what I have read beyond the tweet that both of us are referring to,
no, I'm talking about using the models. I use these models now.
Agreed. But I'm talking about programmers who have weighed in and said, it was significantly better than it was a year back.
I don't know. The results that I have had are actually pretty breathtaking.
Our applications are very different, Neeraj. They're talking about building programs.
Yeah, but my point is that eventually, if AI is going to be user-friendly and making usage mainstream, some bit of it is already happening.
Okay. Fair point. And that's what I'm saying. It's open to debate.
It's a debate, yeah.
The question is, how much do you believe is narrative-driven?
I think 70% of it is narrative-driven, and that's why I'm buying into this fall slowly and gradually. See, nobody is 100% sure. I have spoken to so many people. Nobody is 100% sure, thumping the table, saying that no, this is going to reverse. So buy, or nobody is able to sell only. Although the screen is showing that everybody is selling, and everybody wants to get out of this trade before it becomes a value trap.
Destroyer, yeah.
Value trap. So the screen is showing that, definitely.
But what are the IT companies that are currently in your portfolio?
So Infosys, TechM, LTI Mindtree, Coforge. Okay. And Persistent, I am looking to start buying now.
Okay.
But just one quick thing here, and which is, I think the argument, probably, Alex, could also be about not preempting what AI will do necessarily to the future of the work of these companies, but whether at the current multiples, do these stocks deserve to be bought or not, right? That is the other way of looking at it, independent of what AI will do.
So Infosys 16 times, suppose just give 16 times, it means 6% earning yield, right? And it will give 90%. So I think most of it is getting priced in, the entire worry. Let's see how, today Capgemini.
I think the line in the JP Morgan note, which stood out for me, was that only a companies hit zero terminal growth with no growth hereafter.
Correct.
So I think in some sense, the worst, Let's wait and watch. By the way, we forgot, I mean, amongst all the other things that we've said, this huge...
The Commerce Minister have also commented
Yeah.
that things are not as bad as right now, and it is overhyped. This entire thing is overhyped. That's what Anisha said, right?
Okay, yeah, let's move beyond IT. Let's talk about some other stocks. Osho, very quickly to you first. What has stood out for you on Open, and a word on either PI Industries or Muthoot, whichever one you track, because both of them are looking skittish.
See, both the counters are, as you mentioned, are looking quite bleak as of now, but I am expecting that comparatively, PI industry has given a breakdown, so one can look for sell opportunity in PI industry because there has been a strong positional breakdown in the counter. So any further sustenance below the zone of 3100 can provide sustained movement on the lower end. So one can look for selling opportunity in this counter. But comparatively, there are various counters which has been into my radar from last 15 minutes. Like pharma companies are doing very good. So Biocon can be seen as a buying opportunity for the day. So Biocon is looking very positive to me. There has been a decent traction in this counter. I'm expecting around the zone of 385 to 386 to be tested in intraday, and even it has potential to test the zone of 394 to 96 also. But for intraday, 85 will be the target, and 372 should be kept as a stop loss.
Okay. All right. Final calls based on what you're seeing, and I'm looking at the Nifty 50, just 9 stocks in the green, the broader markets as well. It seems like the breath is terrible today, and we've recovered from the low point of the day for the benchmark, though, down about 0.8%, 0.9% or thereabouts.
Yeah, that's the optimist in you speaking,
Always.
Alex, and that's always a good thing.
Always.
One of those stocks in green is ICICI Bank. I think there's good strength, there's good momentum, and I think that was a call common between me and Osho as well. And Paraguay is obviously given
Something
his...
has to offset for IT.
Something has to give, right? So yeah, ICICI Bank India, very nice up move, very very steady over the last few days, has not, and then 4700, and on the downside you can consider the stop loss at the 4250 mark. So ICICI Bank
below 900. By the way, at 918 right now, having dropped as much as 5%. We haven't gotten a check on that. So, Kush, you want to look at the chart and see what it's doing? It's up about 13%. Would you buy into that?
Alex, I would right now hold at price. You could see the stock go sideways. It's gone sideways for a very long time after being a multi-bagger, but that's a good thing. Just from a very near-term perspective, good move, 210, that's your line in sand. And also if you see the high is also close to that mark, to 206.70. So yeah, above 210, the rally could resume. If it doesn't happen, then you could see some consolidation, maybe even some profit booking coming around.
Okay, on that note, gentlemen, thanks so much for taking the time. Osho Krishan, as well as Parag Bhai in the studio, and Kush Bora, of course, thanks so much for taking the time. Thanks. All right, let's talk about Sarda Energy and Minerals. It continues its transformation into an energy-led integrated player, with power now contributing to a bulk of its earnings, even as Q3 saw a bit of a temporary impact from maintenance as well as expansion across thermal, hydro, solar and mining. That keeps the long-term growth story firmly on track. We will speak to the management in just a short while. Before we do, though, let's set the context, and to do that, we've got Varsha joining in. Varsha, what stands out about Sarda?
Well, energy is the business which will actually stand out for Sarda. So they have transformed from metal company into an energy-led integrated player. Energy is now the core growth driver for the company, and the mining will support actually cost control, and the metals will remain stable. Now, talking about the energy, which contributes more than 2/3 of EBITDA, strong integration with captive coal mine. If you see their hydro portfolios, which is at 167 megawatt, which is operational, and the future total energy capacity target is 1000 plus megawatt, and energy is actually now defining company's growth trajectory. Onto the Q3 numbers, there was a slight revenue decline due to plant turbine maintenance, but energy continues to dominate the earning mix. Onto the mining, which is the second growth lever for the company, the coal and iron ore technically the next leg of growth or next engine of growth for the company after energy. Operations, volume resilience over here, they've seen a volume resilience despite pricing moderation. Overall, yes, it's a transformation from metal or mining to energy.
And Head of Group Corporate Finance, Sarda Energy and Minerals, Johnson, right now on the show. The pleasure is ours. Talk to us about the rationale for
See, so I'll just give you a perspective. We were a few, say, so, and that volatility is there. So consciously, we wanted to get into businesses which, not only we understand, but at the same time also provides stability and sustainability to the cash flows of the company. So that is why we took a conscious decision to move into energy and minerals, both of which we had handled as a part of our existing metal business, but not at this scale and size. So that is where we started the transformation to provide strong business, sustainable business growth to the group. So that's the whole background. And talking of sustainability of this, so if you look at our project pipeline, there's a very strong project pipeline of doubling the both the energy and tripling the mining portfolio, and that gives a very, very strong visibility on the medium-term business growth.
Yeah, Nilay, okay, thank you for that answer. But by when do you expect, or do you aspire, if I can use that term, to do this doubling and trebling of the respective portfolios? And what would it mean for the consol entity earnings as these things materialize? So the timelines, and what does it mean for the consol entity earnings?
So, if you just go back 4 years back in time, we were doing around 400 crores of EBITDA. Today we are doing, this year we expect to do more than 2,000 crores of doubling of the energy capacity from, say, the current 1 gigawatt levels, and the mining capacity growing from 1.8 now to over the next, say, 4 years, I would say, safely. But to give an exact timeline will be difficult because these are projects.
It could be 4 years, it could be 4.5 years. But let's assume approximate timeline of 4 years by when all of this happens.
See, if the capacity doubles, the commensurate impact will come on the EBITDA. I don't want to put a financial number to it. But yes, if you're...
Say that 4 years back, your EBITDA was 400 crore. And in FY27, it's likely to be 2,000 crore. This transformation obviously is at play, right? So when you talk about the contribution to EBITDA 4 years back, this was only metals, or was there some element of energy?
There was a minor, we had a few small hydropower projects which were operational. So there was a minor this thing, but not very large.
Okay, and so when you look at 2,000 crore EBITDA, can you
Say around 70% should be energy this year.
Okay. And so from that perspective, and do you anticipate that this split is likely to stay the case even if the capacity is double on both minerals as well as on energy?
See, between mineral and energy, it should actually go up because growth capex, large growth capex is not happening on the metal side. It is focused on energy and minerals. Now, how the split would be between energy and minerals, maybe minerals will go up a slight bit in percentage because commercial coal mining will start. But overall, between minerals and energy, it should be it should be northward of this only.
This, okay, so energy is going to be northwards of this. What is the split when you say, so current capacity you're saying on the energy front is 1 gigawatts, right?
Approximately, yes.
And when you look at the split, I'm looking at it, it's about 600 megawatts of thermal, and the rest there's hydro and there's some solar as well. But hydro is what, 167 megawatts or thereabouts, right? So we're talking about 1 gigawatt from this point on being added. How does it get added?
There's 760 megawatt of thermal
Okay.
and around 170 megawatt of operating hydro.
Okay.
And we that we acquired, we expect to double the capacity there. And
to 5 years, as you've said, right? So what is the cost involved in doubling this capacity?
See, on the energy front, right, I mean, there are three different type of products. Now will not be proper, but I'll give you a perspective so already in place. So the cost will be significantly lower compared to a green, say, 14 to 15 crore per megawatt. Solar is the standard market, so the solar plant will come up in the next quarter, so that shouldn't be a problem.
Okay. And on the mineral side, are you primarily, and you said commercial coal mining as well, so beyond that, because as we see, there is a requirement for other minerals as beyond coal and iron ore?
So as of now, we have coal and iron ore. Coal is both thermal coal, and now all the future mines are high-grade steel grade coal. We do keep evaluating other mining options, especially because we deal in minerals like manganese ore, etc. And as the opportunities come in the market, we are definitely open to looking at other minerals also.
I'm going to try one last time, Nilay, just to get you to give a perspective to your prospective investor and your current investor. If you double capacity on both sides, what is the potential? Do you anticipate from this point doubling will be easy?
Let's hope. Let's hope for that should be the case.
All right, Nilay. Wish you all the best, and look forward to speaking to you again.
Thank you. Thank you so much.
All right. This entire power journey is extremely important, but it's not just power. There are so many other factors that are coming through with the requirement is accelerating. It's with policy support, and that includes the tax exemption, the tax TT and fintech, and IT has beneficiaries as well. You have in conversation with Sanjeev Verma of Black Box in just a bit, but let's set the context.
Data centers are big now, as you rightly said. This is on the back of announcement of Now this encourages global tech giants to store and process data, and hence India becomes a global data hub. Now talking about the demand, so demand is actually exploding. If you see, the current capacity stands at around 1.3 gigawatt, which is expected to go to 5 gigawatt by FY30. Now talking about who will be the beneficiaries, let me start with real estate, wherein the spike in demand will lead to higher leasing, will lead to long-term rental income. And who will be the beneficiaries over here? If I were to talk about, you have Anantraj, you have Lodha, infra, you have or the REIT players, I would say. Talking about the capital good, let's move ahead and talk about the capital good, the big capex cycle who will be beneficial, because this needs heavy infrastructure. So all your electrical equipment lead to a growth of switchgear and UPS, and hence the companies which will be beneficiaries of this would be your Siemens, your ABB, your need more structured cabling, you need more fiber backbone, rack integration, and hence the companies over here, the company which will benefit is Black Box. Talking about backup and power, you need more genset and batteries, and hence Cummins will be the one of the companies which will be benefited. You have cooling segment, which is actually very important over here, because AI server cooling, precision cooling, and hence Blue Star and Voltas will be the key focus over here, because they'll make chillers used in data centers. Talking about loop beneficiaries when it comes to this segment. Onto the renewable power, you have the data center, if you see, consumes massive electricity, and hence green energy demand. In talk about the DCs will give good steady income, and hence all the recent financial companies will be in focus, considering the data center being the next digital.
Black Box joining in, and of course the end-to-end services in. So much, first of all, for taking the time and help us understand the size of this opportunity, because I think to a certain extent, while people paid attention to that announcement of a tax holiday for the data center space, it might just have flown under the radar because the street as a whole was focused on STT and other things. So lay it out for us. What is the size of the opportunity as you see it?
Well, specific to India, I think the size is just gigantic. Versa called out 1 gigawatt going to 5 gigawatts. I think it is underrated. Even 10, 15 would not be enough from that perspective. Am I audible?
Audible. Please go ahead, Sanjeev.
Yeah, so I think the way to look at it overall, I think the economy today runs on digital infrastructure, be it from our entire lifestyle, from digital payments to ride-hailing to streaming to remote workplace, everything. So I think consider our data center to be the factory of today, the factory of digital age, right? I think the overall consumption capacity for India, or from a data center perspective, I think we've not even started to fathom. And I think it runs into tens of billions of dollars. If you just look from a perspective of the scale of 1 to 5 gigawatts, each gigawatt of data center would require $6-7 billion by Indian context. So we're talking about, if you look 10 gigawatts, 60, 70, $80 billion worth of capital expenditure. It's a game changer with respect to the budget for this year, for not only for global cloud providers, but also for Indian-based investors as well. India, for that matter, would become not only a sovereign, from a sovereign perspective, serving its own nation, own 1.4 billion people, but an AI global hub. It's absolutely a game changer from that perspective. And I believe the game is just starting to begin. It's just starting to warm up. I think the announcements are just starting to come. The airport at the Digi Yatra, you get your thing captured and the gate has opportunity for the entire ecosystem, of course, really for Black Box from a services
of infrastructure, and core to that infrastructure would be power. Do you think that
said it requires massive power? We are talking about power in not only gigawatts, but multitudes of gigawatts. From India perspective, of course, it is a perspective. Solar, renewable is another part. But I think what we've not explored yet is behind the meter. If you look at the US, where Black Box serves most of the largest Mag 7 hyperscalers today, many of them are currently working behind the meter because the grid is choked up. So I think we'll see all three formats. Of course, the power from the grid needs to be expanded. India is spending a huge amount of capital in building newer power plants, both from gas-fired, green power, and so on and so forth. But we'll also see many of those things gridlocked. So therefore, you'll see behind the meter captive solar plants coming into feed, and we already know some of that happening. So yes, gigantic investments, both in power, of course, and from power will generate the heat. Therefore, you'll get into cooling after that. That is a separate subject. But all in all, the entire ecosystem, and I think what's that called out, everything is going to benefit in a very, very big way. From real estate to power to network to telecom to compute to GPU to chips. I think it just goes on and on and on. It's a massive for India, massive.
So quick question to you, Sanjeev, and you understand this business, so help us understand. We're speaking at a time when the IT index as a whole in India is taking a pummeling. And in trade yesterday, you saw the index as a whole drop as much as 5%. You see over 4% of declines as I speak to you right now. The point is that some people anticipate that there will be a sharp shift in the way that workforces are required to be used by the IT industry in India. At the same time, you have this possibility of tremendous employee usage or employment generation by setting up these massive data centers.
First, we don't do that. Every services by the government, by private sector is build the infrastructure completely. And of course, there are you require power engineers to civil engineers to network people. So, it's a very different kind of skill sets. We love to automate, right? I mean, we in our personal lives want to get things done. We don't do those things anymore in our own personal lives. To believe our customers who want to do it in that way would not be right. So it's a cycle change, structural shift, reskilling, retooling would be required. We have to go back to the basics to some extent this time. If you just think about what we spoke about earlier, building power plants, building network infrastructure, these are core infrastructure today. It's a critical infrastructure because the economy runs on that. The GDP today, from a country perspective, is dependent on the uptime of a data center. Imagine a data center being down and a bank not functioning, right? So you have to correlate that. It's how critical that is. It's not a technical infrastructure. It's a critical infrastructure to run a GDP and an economy. New kind of work will come through. So core engineering is coming into play, getting electrical and power and cooling. I think this is a shift. And I think from a black box perspective, we see it as a massive opportunity. We are at the center of digital infrastructure. This is aha moment for the world.
Yeah.
I think we ought to participate in this.
You said it. It's an aha moment. Sanjeev, thanks so much for taking the time. Pleasure speaking with you.
Thank you so much. Thank you so much.
All right. Well, Muthoot Finance is taking on the chin today. Quite the sell-off that you've seen, despite a pretty decent set of numbers, now at the low point of the day. Let's find out what the management has to say in conversation with George Alexander Muthoot, Managing Director of Muthoot Finance. Listen in.
Very strong set of numbers coming in, gold prices also going up. What led to this good up move in Q3, and will this sustain in Q4 also?
I think loans as a means of finance. That's what we see in the last 4 or 5 quarters. Quarter 4 also is looking quite good.
That's a very short and a sweet answer. It is near that, that $5,000 per mark, and it's slightly below that. And for that?
Yeah, I think the gold price is even now, even at $5,000, etc., it is very well, still very elevated. If you look, the last 1 year, the price has gone up by 80%. So probably there is a lot of headroom there. Again, as I said earlier, this is not the gold price which is or the need for funding which is creating the demand. The gold price probably will create a demand for sale of gold, but sale of gold means sale of gold ornaments. But these are people who are pledging their ornaments, thinking that they can take it back or being sure that they can take it back after a while. So the gold price is not the factor. Of course, the advantage with gold price is that you can get more money on the same gold. But notwithstanding that, the demand, the growth is fueled by the demand for funding and the non-availability of easy and unsecured demand. Unsecured loans are not easy to come by. So people are increasingly resorting to gold loans. So gold price, even if there is a fluctuation, it wouldn't matter.
That's a very interesting take on the industry as well as your company. But George sir, I was just looking at the standalone AUM. It looks good, around 51% up year-on-year basis, but the street feels it's a slight miss in the estimates, and a couple of reasons for that. There is a lower LTV, the loan to value ratio, and a sequential dip in the tonnage also. Will these two impact that AUM growth in Q4 also, because this trend might continue going ahead?
No, there is no trend there. The gold loan, the business has been growing very well. So in the last quarter, in the first 3 quarters, we've already grown by 36%, which is much above the last year's 32% or 33% which we grew last year. So it's already beaten last year. There's one more quarter to go, and we see good demand coming there. Now about your tonnage. See, our income is only on the amount we have lent. The tonnage doesn't give us any income. The financial question there. But then, having said that, the tonnage is also coming down because the back. You would have had to give maybe say 200 grams of gold or something like that. Every 3 months, every 3 to 4 months, the whole portfolio churns. So coming with 4 chains earlier, need to bring only 3 chains now. So I can't ask him. That is why the tonnage is going down, because as the price goes up, the tonnage has to.
Operating expenses with AUM and the credit cost, they have surprised positively. Your view on that?
See, the credit cost actually it is mainly because of the the personal loan business which we started. So personal loan business has a credit cost. Unlike gold loan, which has no credit cost, the personal loan business has a credit cost. The credit cost bump you see is mainly because of the aggressive write-off in the personal loan. What if we have a very small personal loan portfolio or unsecured loan portfolio about 3,000 crores. So on that 3,000 crores, there is always some aggressive write-off. But of course, we recover the money later. So as a policy, we would like to write off the loans or maybe derecognize the profit and write off the loan. So the write-offs you see are in the personal loan portfolio.
And are they continuing in the fourth quarter also, George sir?
See, the personal loan portfolio is only 3% of our total portfolio. Okay. It's just
not
it's too insignificant.
Impact. Right. And there was a little bit of ease of branch expansion norms also. And what will be your strategy, especially in the non-south regions, how you're expanding? If you could just give us that entire picture of that.
Yeah, I think we usually open about 100 to 150 branches. But for that, we need to get the Reserve Bank's prior permission, because there are about 4 companies which are having more than 1,000 branches. So the moment you cross 1,000 branch threshold, you need to get prior permission from the regulator for opening a branch. People with less than 1,000 branches need not go for prior permission. So we had been telling the regulator that it is unfair that asking only the big players to ask prior permission and the small draft regulations, they have removed this clause that even we, the is not required. We are going to start 1,000 branches. No, usually we start 100, 150. All that is going to. But the most important message I would like to say about this is I feel that they would like it to grow. And these are some of the comfort which they're having with the bigger players. It shows the comfort, the confidence of the regulator. The thinking is there. But we have seen the portfolio of the gold loan going up very well, not only for the NBFCs, even for the banks. Today, banks have a portfolio of more than 13 lakh crore, and NBFCs have a portfolio of only 3 lakh crore. Both are growing. Last full year, we have grown by 36%. So in the 3 quarters. So it shows that there is room for banks. There is room for NBFCs also.
Yes. George sir, one more query is there, and this query is not regarding the company, it's regarding the industry, the gold financing industry. You are a stalwart of that. AI has come and everybody is talking about it. Bajaj Finance spoke about how they are using AI. How much is relevant AI for your company, and anything has started on that front?
AI is good for locating a customer, for lead generation, good. But finally, the gold has to physically come to the branch. So we can't wish away. That is, again, that is one of the reasons if the gold business has to grow, the branch has to be opened. That is something which we articulated to the regulator. That is why they have removed the prior permission for branch opening. So this is a physical touch and feel business. The gold has to physically come to the branch. The AI can be used for disbursing the money, for collecting some money, but for really the gold to come, it has to physically travel and come to the branch. When somebody takes it back, he has to physically come to the branch to take it. AI, I think, as a first cut or first thought which comes to me would be AI can help in customer identifications, etc.
All right. So customer identification, AI will be used when it comes to gold financing companies. But remember, it's always touch and feel. And that's pretty much important as well.
Presenting the all-known, where the mysteries of megabytes and motherboards shall be
connected ecosystems, EVs and AI that you can use in your daily life. That's
Social Your Tech Show.
Hi, this is Keshav Zikol speaking. He's not around right now. How can I help?
It used to pester you, it used to irritate you, it used to be something that you didn't want. This is a massive pain point in India, by the way. Phone spam.
Tell me a bit about Equal AI. Tell me a bit about your journey here.
Being a third generation entrepreneur or from a family business and wanting to build your own company, the reality is the challenges are there and they're much harder in different ways. With the advent of agentic AI, we built something interestingly where it'll pick up your phone for an unknown call, speaks on your behalf, then connects the call to you, saying this person is calling for this purpose. Would you like to answer?
You saw what happened with Anthropic and those tools which came out. How are you looking at these fast-paced developments? Because business can become redundant overnight right now.
People who are unable to adapt to AI will get impacted, and that's going to be a societal crisis.
Running a family office or being involved in a family office is also work. I'm not saying it is, but there was this sort of I know it's out of the debate you're on.
Sitting in a family office is a more wealth preservation structure. Wealth creation or value creation structures is when you're actually building a company.
All
right, team, our new auto will make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it. So
India Market Open. Now in its tested and stocks get conviction.
I'll recommend a buy call on a stock only
When the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show.
back with India Market Open right here on NDTV Profit. Well, we know that tech is continuing to bleed. So even mid-cap and small-cap tech, right? So Birlasoft is down 11.7%. KPIT Tech is down 7.5% or 7.8%. And, well, Tata Tech another 5% lower for a business which came out with an IPO. And nothing is spared. Literally nothing has been spared. What is doing well, though, you have to admit, is stocks like Engineers India. Fabulous show in the quarter, and it's reaping rich rewards for that sector, so that stock. So 12% higher for that one. There is strength in Honasa, 4.5% higher. And viewers would remember yesterday we spoke about Kirloskar Oil Engines and the numbers that that company delivered. That stock is up another 3% in the session today. Was up in trade yesterday as well, if I'm not wrong. So there are these 3 or 4 names which are doing well. Alex said, or was it me? Okay, and Linde India is up another 1.5% as well. So few stocks which are doing okay. LG Equipment, well, is up about 1%. If anybody's bought it based on your due diligence and follow that conviction yourself, especially 0.5%, but 5% lower for Nifty IT again.
Yeah, absolutely. And if we actually pull into industries once again, making its way into the biggest draggers sport. Let's go across now to just today. And Mr. Kalyani, Amit Kalyani seemed quite positive on the businesses that have been set up to supplement the traditional businesses, and he anticipates that it will start firing on all cylinders in FY27. But there are a couple of upgrades that have come through from brokerages as well, who seem to have Smith?
Well, Alex, thank you for that. As rightly said, after yesterday's result, we have 2 brokerages that have upgraded their stance on this particular counter. Well, we have something like Jefferies and Morgan Stanley on this. Well, Morgan Stanley upgrades to overweight from EQA, and they have hiked the target price to 1978 from earlier 1341. While on the other hand, Jefferies have also upgraded the stance to buy from earlier underperform and hiked the target price to rupees 2,150 from earlier 1,300. We see a big jump coming in terms of the upgrade. Let's quickly understand what are the brokerages saying for the same. Well, Morgan Stanley, what they say is they say the bottoming of the US and EU truck cycle coming in from the defense, and they expect the revenue to go up by 20% going further. But they also see that the segments such as defense sharply expand the addressable market for the company as well. Well, something like a Jefferies, they see the improving earning trajectory for the management going ahead, and they also upgraded the EPS for this particular counter. While they expect the EPS to grow and accelerate at 12% CAGR when we saw in 24-26. Further going ahead, they expect the EPS to jump to 33% compounded growth between FY26 to FY28. So we see a huge upgrade coming in for this particular counter.
Okay. All right. Thanks so much for that. You know, Neeraj, we were talking about this briefly this morning, but it's not the first time, of course, that the IT pack as a whole is getting sold into and bearing the brunt of that selling, right? If you go back all the way to the dot-com crisis, the drop in whatever IT company, and he said that 11, 12 or 13% there, not actually proved to be a fillip eventually for these IT companies, right? It saw that drop after that, as much as 31%. So now you're going closer to that 2020
shift, and it'll be interesting to see how this one shapes up. But speaking of the disruption and the reason for the disruption, right? AI, and as India and Delhi are gearing up for the India AI Summit next week, my colleague Rishabh Bhatnagar spoke to MeitY Secretary Krishnan, Mr. S. Krishnan, on what to expect.
February 16th. What are the sort of massive names that you're expecting to be in attendance, and also from the political side, from the head of states, some massive names expected? Talk to us about that.
We are expecting about 20 heads of states and heads of ministers, plus delegations from many other countries, nearing almost 100 countries. In addition, close to 100 CEOs, some of them very prominent and important, and which we've already been talking about, like Mr. Jensen Huang of NVIDIA, Sundar Pichai of Google, the CEO of Adobe, and we will be seeing a number of them in this event. In addition, at least 2 Nobel laureates, Michael Kremer and Demis Hassabis.
In terms of AI models, and also in terms of the compute capacity or contours of the India mission, AI mission 2.0?
I think what the India AI mission has done to democratize access to AI resources. I think that has been the is a model which is available to the global south as well. Whether it is availability of establishing India's own foundational models have also gone ahead also.
All right, so exciting times, and you'll find all of the live coverage right here. And don't miss it, because you're seeing some of the big names on Secretary Vinay Mohan Kwatra has said that the framework announced recently reflects a carefully negotiated, balanced and mutually beneficial outcome that protects India's. In an exclusive interview with NDTV's Aditya Raj Kaul, Kwatra underlines and beyond trade volumes, Kwatra highlighted the strategic logic underpinning the agreement. Listen in.
Let me begin by asking you, at this time and at this juncture in history, is this trade deal? कितना महत्वपूर्ण है इस ट्रेड डील का इस समय पर होना, जब 20 साल से हमने एक स्ट्रेटेजिक पार्टनरशिप देखी है, हमने बायपार्टिसन सपोर्ट देखा है इंडिया के लिए, और अब ये ट्रेड डील जिस वक्त आप वहां पर जो है मौजूद रहे हैं.
नमस्कार आदित्य, सर्वप्रथम धन्यवाद मुझे अपने चैनल पे निमंत्रण करने के लिए. देखिए, मेरी जो इस अंतरिम व्यापार समझौते का जो फ्रेमवर्क जॉइंट स्टेटमेंट के माध्यम से जो अनाउंस हुआ है, जो मेरा इसमें परिप्रेक्ष्य है, जो मेरी प्रतिक्रिया, ये मैं कहूँगा ये केवल मेरी प्रतिक्रिया नहीं है, बल्कि भारतीय अर्थव्यवस्था में के जितने भी जानकार हैं, जितने भी इस रिलेशनशिप में स्टेक होल्डर्स हैं भारत की तरफ से, चाहे वो हमारे इंडस्ट्रियलिस्ट हों, चाहे वो हमारे सीईओ हों, चाहे वो हमारे फार्मिंग कम्युनिटी के मेंबर्स हों, किसान भाई हों, आप हर एक का लगभग सबका एक मत है कि ये उपलब्धि भारतीय अर्थव्यवस्था के परिप्रेक्ष्य में, अपितु भारत यूएस संबंधों के परिप्रेक्ष्य में, मैं तो ये कहूँगा कि जहाँ तक भारत परिप्रेक्ष्य में देखें, तो जहाँ तक हमारे आर्थिक सहयोग का प्रश्न है, स्तंभ के रूप में, उपलब्धि के रूप में देखा जाना चाहिए। और इसके कई ये एक तथ्य आधारित प्रसंग है जो कि जिसको समझना के लागू होने के बाद भारत के निर्यात जगत को, भारत के व्यापार को किस प्रकार के जो हैं अवसर उपलब्ध होंगे, ये तो उन्होंने बड़े विस्तार से, बड़े विवरण में कई चैनल्स पे, आपके चैनल पे भी जो है स्पष्ट किया है। जो हमारी एग्री प्रोड्यूस हैं, वो प्रोड्यूस जो हम एक्सपोर्ट करते हैं, वो प्रोड्यूस जिसमें हम सेल्फ रिलायंट हैं, डेयरी का क्षेत्र। मैं इसमें इतना ही कहूँगा कि आप सब लोग जो हैं हमारे माननीय वाणिज्य मंत्री जी को अच्छी तरह सुन चुके हैं। उन्होंने पिछले 3-4 दिनों में एक्सटेंसिव इंटरव्यूज़ हर चैनल को दिए हैं, आपके चैनल को भी दिए हैं, और उन्होंने स्पष्ट रूप से कहा है कि जहाँ तक हमारे कृषि क्षेत्र में जो भी सेंसिटिव एरियाज़ हैं, इंक्लूडिंग डेयरी में भी, जो भी हमारे प्रोड्यूस हैं, एग्री सेंसिटिव प्रोड्यूस हैं, उनको पूरी तरह से सुरक्षित किया गया है। और ये निर्देश जो है, मैं कहूँगा उद्देश्य नहीं है, इसको हमारे नेगोशिएटर्स ने एक दायित्व के रूप में लिया है कि हमारे जो कृषि उत्पादन के, फार्मिंग कम्युनिटी के और डेयरी क्षेत्र में जो भी हमारे सेंसिटिव मुद्दे हैं, जिसमें भी, जिस प्रोड्यूस में भी हम सेल्फ रिलायंट हैं, उनका पूरी तरह से संरक्षण सुनिश्चित किया जाए। ये माननीय वाणिज्य मंत्री जी ऑलरेडी कह चुके हैं, और ये ना केवल हमारे नेगोशिएटर्स का उद्देश्य रहा था, ये हमारा एक दायित्व था जिसको लेकर हम आगे बढ़े थे।
एक महत्वपूर्ण सवाल ये भी कि पिछले 1 साल से या पिछले करीबन 10 महीने से जो 50% टैरिफ लगा हुआ था, हमने देखा कुछ ही दिन पहले जब जॉइंट स्टेटमेंट आया, उससे जस्ट पहले एक एग्जीक्यूटिव ऑर्डर, मैं रात को जगा हुआ था तो मैंने 4 बजे सुबह भारत के टाइम के अनुसार देखा कि एक एग्जीक्यूटिव ऑर्डर आया जिसमें 25% टैरिफ जो था वो हटा दिया गया, और उसके बाद एक जॉइंट स्टेटमेंट जो है इंडिया और यूनाइटेड स्टेट्स के बीच में आया। तो इसके संदर्भ में मैं आपसे पूछना चाहूंगा कि जो 25% टैरिफ हटा दिया गया है और अब ओवरऑल टैरिफ जो है 18% है, ये कितना बड़ा
जहाँ तक ये अंतरिम व्यापार समझौता स्पष्ट रूप से अंकित है
जी,
वो जॉइंट स्टेटमेंट एक डॉक्यूमेंट है, समापन के बाद जो है इस पे साइन होगी। आई थिंक हमारे वाणिज्य
And moving on to the story of two earnings, while Lupin has water. Varsha is here for covering the highlights of both the companies. Varsha.
Well, starting with by agrochemical exports, which saw 32% year-on-year decrease in revenue. Well, of course, the near-term demand softness which the company saw was growth momentum to start from Q4 FY26. Now, talking about the agrochemical export, over here the revenue declined 32% due to drop in volume, which was aligned with customer delivery schedules. Onto the domestic revenue, saw a softness of about 8% year-on-year due to lower farmer demand for high-value products, and of course, adverse weather conditions also impacted the key crops like chili and grapes. Onto the pharma, over here the revenue contracted almost 6% year-on-year due to deferred supply schedules to Q4 FY26. The pharma revenue although grew 50% year-on-year in 9 months FY26 period. So overall, yes, a very weak set of numbers when it comes to PI industries, and let's see how the Q4 pans out. But agrochemical export was the key highlighting factor which led to degrowth of almost 32% year-on-year. Now, talking about Lupin, again, as expected, Q3 was expected to be on good terms, and so the Q3 did beat estimates, I would say. Now over here, the highlighting factor in Lupin is of course the US business. If you see, while other pharma companies have posted negative growth in US, Lupin on the other hand has posted almost a very strong growth in US. Now this is because of the high competition launches or exclusivity product launches which Lupin did in this quarter. Now if I were to talk about revenue, EBITDA was a beat. Q3 performance was led by a strong US, and total India growth, if I were to talk about US, on the India sales was up 5.6%. If you accounts for 29% of Lupin's global sales, launched 13% of Lupin's global sales, and the global API sales was down against peers like Dr. Reddy's or Cipla, wherein you saw that degrowth in US business due to Revlimid.
So much, Varsha, for getting us those details. PI Industries and Lupin. One actually, Lupin has given up a little bit of its gains and trading with cuts of about 1.6%. So really, more than anything else, the mood and the tenor right now a little bit weak. In fact, pull up the advanced decline ratio just to drive home that point, and you will notice that it is at probably the widest point of the day at this juncture, and it really hasn't changed. Very, very weak texture at this moment. Pull up the top gainers and losers on the Nifty 500 if we can, and you'll see what is moving. And apart from Engineers India, and this is the 50, can we move to the broader markets? You will see apart from Engineers India, there's not too much that is moving very sharply on the upside, and we mentioned a few of these names. Of course, that brings us to the end of this edition of India Market Open. It's been an absolute pleasure bringing it to you. But we've got lots lined up, Neeraj. There's a conversation that you've had with Indian Hotels that plays out at 10:30. So stay tuned for that.
Equal speaking, he's not around right now. How can I help?
It used to pester you. India, by the way. Phone spam.
Tell me a bit about Equal AI. Tell me a bit about your journey here.
Being a third generation entrepreneur or from a family business and wanting to build your own company, the reality is the challenges are we built something interestingly where you can it'll pick up your phone for an unknown call, speaks on your behalf, then connects the call to you, saying this person is calling for this purpose. Would you like to answer?
You saw what happened with Anthropic and those tools which came out. How are you looking at these fast-paced developments? Because business can become...
And that's going to be a societal crisis.
Offices also work, I'm not saying it is, but there was this sort of comment and question.
Wealth creation or value creation structures is when you actually
presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on
Tech has changed. So should your tech show.
All right, team, our new order show is ready. Now we need a
suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive.
New Year. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra. Same show, sharper voices. Every morning on NDTV Profit for your
the day's biggest business stories, what happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. How is the sector shaping up, and what is the leader doing within that? Mr. Chatwal, thanks so much for taking the time out and being with us. What's your put the quarter into perspective? All record numbers, but I mean the PAT growth way more in terms of percentage terms versus the revenue growth. But are you happy with the quarter?
You know, we are very pleased, Neeraj. Thank you for firstly for having me again on your channel. We are definitely pleased, and little correction. It's not the 5th, but the 15th consecutive record quarter. And the sector has been performing quite well. I think what the sector is demonstrating is something unique, that it's not cyclical as it used to be. There is a structural shift that has happened in the sector. And obviously, as you rightly said, we being the largest hospitality ecosystem player in the sector, we are benefiting from that kind of growth. And from our own point of view, we have changed the business model, and we have driven our growth and our pipeline by geography, by contract type, and by brands in such a way that we are able to hedge against any kind of headwinds that come and have come. I mean, this financial year, April started with Pahalgam, May we had Operation Sindoor, June we had the airline accident, followed by turmoil in the Middle East, then later in Bangladesh, flooding, landslides, everything happened that one could think of, but still the sector on the top line. And we are obviously very pleased with it because our base keeps getting.
But I hear that the room rates during this AI summit in Delhi, low teens growth for the March quarter and beyond. Are we reaching a period of time? Are we already at that stage now?
I think we did not say low teens. We said anything between 8.5 to 10% on RevPAR, but total revenue, what we said, is between 12 to 14%. So I think that is quite a healthy number to get to because the base has become so high. So in a way, with very strong performance on the Taj brand, if you keep doing 8.5 to 10%, on a base of 22,000 rupees, that's not bad. That's quite a good level of growth, because higher the number gets, the higher is the flow through to your profitability.
Got it. I think when I look back at least the journey in the last 5, 6, 7 years, Mr. Chatwal, one of the key differences has been that you've become maybe asset light and maybe managing a lot more hotels. Now, suddenly what I'm seeing, and maybe I'm wrong here, but what I'm seeing in the last 12 months or 18 months is a bevy of inorganic moves that you're doing. Are these properties or assets available at an attractive price for you to be doing this? And does this last well into the next 12 to 24 months or longer?
I hope it lasts much longer. So I think firstly, we had to go for a very good capital structure, especially post and during COVID when our revenues dropped to zero. That's one. Second is, as I mentioned, growth by brand. If you want to play in the mid-scale boutique properties or mid-scale mass brand, which is Ginger, then scale is critical. Otherwise, you should not be in that business. If you cannot scale to 500 hotels in the next 10 years, we should not be doing that. Similarly, if you're in a homestay, if you can't scale to 15 consecutive quarters of record performance after eliminating debt, inorganic moves, which are prudent and financial position of Atmantan. So I think the diversification of top line for I would say India, and that is the Taj brand, which is becoming. We are pleased with the growth that we have had and the prudent moves we have made both on the organic and inorganic front.
Mr. Chatwal, one more question, and maybe a strategy question. I'm just trying to get your view here. And maybe because the hotel industry has been so cyclical, sometimes it surprises as to the stability that has come in the recent few. But as I look at your product suite, between geographies, between business segments, between brands, and the revenue drivers as well, between revenue drivers, there seems to be this very strong effort or thought process in diversifying everything so that if something were to go wrong, the other thing makes up for it. Are you kind of pursuing that kind of strategy so that you can have steady growth, maybe lower growth than what might happen in a particular quarter here and there, but a steady growth which may last for long?
Absolutely. I don't know my compliments for having, you having guessed that so beautifully. The idea has been to remove volatility from the business so that we are less cyclical. And that's what I meant, the diversification in the brandscape, the diversification of the top line. And also, when you're a 120 plus year old company, you're sitting on many iconic assets. That's where asset management becomes so interesting that you can use all the spaces that you have and run your imagination, and with very small moves, you can make some magic happen. And one of the best examples of that has been our reimagination of the Chambers, which is our by invitation only, but those new memberships drive 88